How's it going, everybody? It's Stas here, and in today's video, we're going to be doing an overall market update, breaking down the Dow Jones, the S&P 500, and the NASDAQ, and we're also going to be doing a trading update so I can share with you all what I personally did today in the stock market. Plus, I want to go over a bunch of stocks and ETFs that I'm watching and that I'm looking to trade right now in the middle of arguably the craziest stock market that we've experienced here in recent memory. And like you all read in the title, I also want to go over NIO stock. I want to go over their earnings and kind of how their stock reacted so we can get a better understanding of how they've been doing as a business in this crazy time period that we're in with the whole outbreak, etc. Right? So all I ask from you is, if you enjoy the video, as always, hit that like button for me. Let's try to get 150 likes. The challenge is on. I challenge you. Can we get this video to 150 likes? And also consider subscribing to the channel if you want to see further content like this. And if you want to be further connected with the Strive Smart community, feel free to get into our Discord community down below in the description box and our Facebook group. Those are 100% free of charge. So let's just get right into it, guys. The market closed 4.5 minutes ago, and we saw yet again another crazy squeeze heading into the close. You can see here the S&P 500 ended up closing down 130 points, down 5.18%. And the truth is, guys, it recovered quite a bit, and it was worse, way worse a couple hours ago. If you guys were watching, we hit yet again another circuit breaker today. And if you guys don't know, when the markets in general, the NASDAQ, S&P, and the Dow, when they go down 7% and a circuit breaker is hit, the market gets halted for 15 minutes. So we saw that again today, and that was right around here at about 12:31 p.m., and we were down 7%. And from there, we took another 3% dive down to the point where we were down 10% at the worst today in terms of the S&P 500. And that's pretty incredible, again, because we recovered 5% out of that 10% loss in the last hour and a half. So quite the move up there in the markets here in the last hour and a half of trading. And overall, guys, on the hourly chart, the downtrend is still intact on the S&P 500. Now, moving over to the Dow Jones. Dow Jones down 6.3% today, down 1,338 points. Pretty crazy down day in terms of the Dow here. And going to the 1 day, 1 minute, you can see we got down pretty down there today, guys. 18,900. So now we're getting closer and closer to that $15,000, $16,000, $17,000 price target that we talked about on the Dow Jones, for the Dow Jones here over the past couple of videos. And just like the S&P, massive squeeze here towards the end of the market. We went from 18,900 all the way up to about 19,800 in about an hour and a half, being roughly a 1,000 point move in the Dow. And as the Dow gets smaller and smaller in value, guys, obviously these 1,000-point moves, they're going to hit harder. They're going to mean more to the Dow Jones because they're a bigger part of the Dow Jones as it gets smaller and smaller. So keep that in mind. 1,300 is pretty massive compared to what it was back in terms of when the Dow was like 26,000, and I mean a 1,300 point move to the downside. So pretty crazy, right? And at this point, when we're looking at these markets on the 20-year chart, I touched on this a couple days ago, yesterday as well, but we're at points now that we haven't been at since 2014, 2015, 2016, which is pretty incredible, right? And that's across the Dow, the S&P, and the NASDAQ. And speaking of the NASDAQ, down 4% today. Not as bad as the S&P and the Dow. It was down 300 points at the close. And if we take a look here on the daily chart, we saw a bottom today of $6,800 on the NASDAQ, and we ended up running from there up about 300 points in the matter of the last hour, hour and a half, as we saw that massive, massive push to the upside, right? So if we're taking a look from yesterday's close to the bottom, the NASDAQ was down about 8.5% to 9%, almost 10%, right? So this thing, it's continuing to be volatile, which goes to show, trading right now, sure, there's a lot of opportunity, but it's very risky, because if you get caught in one of these wrong moves, you're going to either get forced to bag hold, you're going to get your emotions tested, you'll probably lose money, or if you're smart, right, if you're more seasoned, you understand that, playing it safe is a good idea, right? Sometimes no position is the best position, sometimes cash is the best position, right? And more seasoned people understand that this is the type of market that you need to get in and out very quick with decisiveness. Don't try and, force things. Don't try and predict things too far away, because, again, it's very difficult to do that because the market is moving in all sorts of directions. You can't even predict 30 minutes from now, let alone a week, 2 weeks, right? So keep that into consideration when it comes to, trading this market. And just know volatility is here to stay for the time being. And I personally don't think it's going to change. And we can see here the futures, they're pumping up even further here after market hours. So we're seeing quite the rally in this market over the past 2-3 hours. Is this, that stimulus kicking in, from the Fed, that nice, juicy $1 trillion, billions of dollars in the repo market, or is this maybe a short squeeze? Is this maybe a short squeeze? It could be that as well. It's just crazy in the market nowadays, guys. Let me know in the comments your thoughts on everything, markets in general. I would love to know. Now, let's get into what I personally did in this market today, and I got in and out SPXS very quickly today at around 12:30 p.m. Eastern Standard. And let me explain to you guys what I was personally watching today on the S&P and why I ended up getting into SPXS. So the S&P in general has been holding 2370, 2380, 2390, this general area of support quite strongly over the past couple of trading days. And if you guys have been following the markets, you know this, right? And you can see it right here. Let me zoom in a bit. The past 3 trading days, including today, 2380 has been very strong. Look at this, right? This level right here, boom. So for me to get into SPXS, which goes up whenever the S&P is going down, I needed to see a definitive break below this level and kind of the dump off from there, right? And luckily, I timed this to the point where I got out before the halt, which again happened right around here, right, as you see these little dots. But it was pretty perfect timing on my part, right? And it was pretty much, again, from here when the S&P dropped 12:30 down to about 1 p.m. And if we take a look and see how that correlates over to SPXS, I personally got in. Let me show you on the daily chart here, 1 day, 1 minute. Close to 12:30. I'm pretty sure it was right around here, $23.60 or rather 36 cents, and I ended up riding it up to about, I'm thinking it was $23.80 $23.87, right around $23.87. So in and out type of trade, quick type of trade. And overall, guys, that's all I ended up doing today. And it yielded me, let me show you all in terms of percentage here, it yielded me close to a 2% gain in terms of that trade, right? And this is what I've been doing, guys. In and out, SPXS, maybe TVIX2 in terms of these leveraged ETNs, ETFs that trade based upon volatility in the markets. This is what I've been trading. Not really a lot of large caps in terms of my personal trading, but that's just what I've been doing, guys, and I would love to know down below in the comments, what are your thoughts on that? What are some stocks that you're buying, some stocks that you're trading? I would love to know. Now, let's get into NIO stock, ticker symbol NIO. NIO stock, Chinese electric vehicle maker. And guys, they're having some tough times right now, as every company out there is pretty much, because of the whole CV outbreak and everything going on, and especially these Chinese companies, guys. You have to understand they're under a lot more pressure out there than us, I would say. Especially because they've been going through this problem for a lot longer in terms of, they had their outbreak, in their first outbreak, in November, December, it got bad January, February, right? So these businesses, especially in China, they've been getting squashed, right? And when it comes to NIO, let's talk about some numbers here. Wall Street, let's just talk about some expectations first. Wall Street expected Q4 net loss of per share to narrow to 36 cents from 47 cents a year ago. That's what they expected, right? And revenue is expected to shrink 17.5% year over year to $412 million. And NIO ended up reporting a net loss of 39 cents per share. So they missed on EPS there because it was expected to be 36. So they missed there. And they also missed on sales, which came in at 409.1 million. So overall, right off the bat, they missed EPS and revenue. And another thing here is Q4 deliveries were 8,224 versus the 4,799 in Q3 and versus 7,980 a year ago. So when you're looking at year-over-year growth here, when it comes to NIO deliveries, their delivery numbers, it's not too impressive, right? They're not growing at massive clips. They're pretty much they're pretty much flat year over year, because a year ago, 8,000 deliveries, and a year later, it's only 8,200. So that is not too impressive. That is for sure why we're seeing NIO take a nosedive here, down 16% at the close of the market today. When they reported earnings, it went down from $2.80, $2.90 down to about $2.07. And another kicker here, guys, is, like I said, this outbreak, this CV that's been affecting everything pretty much, right? This is affecting NIO even further, and NIO sees Q1 deliveries down 56 to 58% from Q4 of 2019. So that's another reason why the stock is falling. So, it's really real, guys. This whole outbreak, it's affecting the conglomerates, the massive companies, and it's also affecting these little guys out there that, especially in the States, around the whole world, right? These little companies out there that are trying to make a come up, right? To get their product out there and to really just blow up. And NIO, in my opinion, is one of those companies. It's small. I consider it a spec stock, and they're really, really struggling at this point. And for me, guys, this is why it's a spec play for me. This is why I don't have a lot of money in it, because take a look. In the past 2-3 weeks, ever since it got really bad here, in terms of the global outbreak, this stock's gone from $5.30 down to about $2.07. And honestly, this is a company that, when it comes to the Chinese government, I think they'll continue to bail them out. I don't think they're going to let NIO go bankrupt. We've seen several financing, attempts successfully finance. What am I trying to say, guys? Successful investments from the government, from other parties into NIO. That's what I'm saying. There's been many of those, and kind of like what we're seeing here with the airlines, with Boeing, that they're probably going to get bailed out. I see the same for NIO. I see NIO getting bailed out, so I'm not too worried about them. And then again, it's a small investment for me. If it goes bankrupt, that's the risk I took when I initially put money in it, so I'm okay with that. But either way, NIO is for sure one worth watching. And who knows, if this thing gets back to penny dollar status, or penny stock status, maybe back down to $1.50, I might buy some more, guys. Who knows? I might buy another couple hundred shares, just to average down, because my average cost right now, haven't checked it in a while, but I think it's somewhere in the $3 range. So I'm actually down right now on my NIO, but again, I don't really care. It's a long-term investment. Now, let's talk about some other stocks, ETFs, and REITs, and let's start with the REIT here. Realty Income. This thing went down 23% today. Yesterday, we were talking about it at $50, and I didn't think it was going to fall another 25% from there, but I was wrong, and it did, guys. And the more it falls, the more attractive it gets. We're talking a 7% dividend yield as of right now, in the low 40s for Realty Income. And I think they just let me take a look at this, guys, for you. I think they just increased their payment. Let me look at this. Realty Income hikes monthly dividend for the 106th time, and this comes on the backing of the share price being slaughtered. So they're still upping that dividend, guys. And I'm looking to buy pretty heavily right now into Realty Income. When it comes to my top 5 that I'm looking to buy, top 5 investments that I'm looking to add money in right now in the stock market, REITs and REITs included, is definitely one of those, and I talked about that recently in yesterday's video, right? Another one that I'm looking to buy here for the long term is MasterCard, ticker symbol MA. This is one that I really like when it comes to the payment process business, right? Visa's another great one, but I think MasterCard, and you guys, if you've done analysis and research into them, you know this, but MasterCard has more growth than Visa, which is why at this point, they're both great. You could put both in your portfolio, but at this point, I would go with MasterCard just because, again, it has a little bit more growth, but really, you could really own both, and you can't go wrong with either one. But MasterCard, I'm just eyeing it up. Visa, again, could go with either one here. Visa down 6% today, down $9.40, down to the $140 range today, guys, which is pretty incredible. And yeah, not much to say about it, although just it has a lot of value, in my opinion, in the low $100 range, and the closer that it gets there when we're looking at a 5 to 10 year perspective, right? So let me pull up my notes to see some other stocks here that are on my list. Okay, let me pull it up. Here we go. Facebook, guys. this one is getting to some pretty interesting levels. It hit $137 today. Now it's at about $146, down 1.65% at the close. And when we're looking at the price historically now, we're getting to levels that we haven't been at since this 2018 correction and rebound, right? This little V-shaped correction. And that's what a lot of people are thinking the stock market's going to do. Some sort of V-shaped correction where it goes down aggressively, right? Like we're seeing right now. And then it goes back up aggressively in terms of the rebound, kind of like what we see here with Facebook. And will Facebook do something like that? Maybe, right? Maybe. But in general, 120s, 130s, that's where I'm looking to buy some Facebook. Square is another one of those fintech companies in the same type of business as PayPal. And there's a bunch more, right? They're also competing with Visa and MasterCard. Square got absolutely hammered earlier today. I think it was down like 25% at one point. It was down to $32 per share. Ended up rebounding $7 heading into the close, $7 per share, which is quite impressive, but still, it ended up closing down 12% today, which is insanity, right? And Square, I think when we're looking at fintech, Square and PayPal are the winners out of the United States. I know Facebook is carrying up something with Facebook Pay. We have, of course, Alipay. We have a bunch of ones over in China. But overall, I like Square, and I think it's here to stay, and I think it has a lot more growth in the future. So anything in the $30, $20 range, if we're looking 5-10 years out, I think that is a very good price for Square. And if we're taking a look at another spec stock, guys, Virgin Galactic, it's coming back to earth, no pun intended, down 17% today, down $2.10, and we're almost back into the single-digit stock prices, down to $10.56 right now. So for me, I'm looking at maybe buying a little SPCE. I probably won't though, but if it gets down to, let's say, $5-6 per share, I might buy some as a spec play. Who knows, right? Add some more flavor to the portfolio for the long term. Now, let's take a look at CCL. CCL, what did I tell you guys? What did I tell you when this thing was at $40 per share, $30 per share, even $20 per share? I was telling you there's more downside. This is a very cyclical business. It's prone to downturns and weakness in the economy. And now with everything going on, it's accelerated this, this onslaught of red for these cruise companies to the point where CCL, I don't even know, like, this is crazy. I didn't think it was going to get this bad, but to the point where it's at $7 per share. It closed at $9 per share, down 30% at one point today. This thing is going to be a penny stock at this rate. Next week at this rate, it's going to be a $3, $4, $5 stock. And at that point, guys, this could be another spec play. Who knows? This could be another spec play. It's more proven, obviously, than Space and NIO when it comes down to, earnings, revenue, and actually being profitable. It's way more proven, but it's risky. It's a risk at this point because they can go bankrupt. And if you're buying at $3, $5, you're pretty much banking on, obviously, the recovery. And you're banking on a potential bailout at the end of the day, right? And for me, I would probably be interested in buying some again at around $5 per share, maybe like $1,000 for the long term, right? If they do a rebound, this could truly be at these prices. This stock could be a 5-bagger, 6, 7-bagger. Who knows? That's if they rebound. And guys, mind you, that is a very big risk to take because who knows who's going to make it out of this potential recession that we are going into right now. And honestly, it's looking very likely that we are going into a recession, and the Fed is trying so hard to prevent that with all of the stimulus, all of the money, quantitative easing now that's coming into the system. This is getting insane. So tech, let's go over tech very quickly. Tech, Netflix, down $4 today, held up pretty well, only down 1%. Microsoft held up pretty well as well, 4% in the red. Google down 2% today, solid. Facebook down 1.6%, that's pretty solid. Amazon, guys, Amazon was green today. That is incredible, up 1.24%. Apple down 2.45%. When it comes down to Uber, you're going to be shocked at this. Uber down 21% today, guys, down to $14 per share. Let me know your thoughts on Uber. Are you interested in buying Uber right now? I would love to know. Tesla down 16%, down $70 per share, and we're slowly getting my wish. Tesla's getting back to that 350, 300 level, so I might buy some Tesla here, guys. Disney down 5%. Earlier, it was down to $79, ended up closing at $88. Pretty incredible there. Boeing down 17% today, down $22. It hit a low of $89. Pretty incredible there. When we're taking a look at crude oil, remember what I said yesterday, guys. People are asking me, are you going long crude oil? Are you buying some of these oil stocks? I was like, no, I think crude oil has more downside. Well, what do you know? The next day, it is down 16%. It is down $4.40. And it hit a low today of $20.52. So that means some of my calls from yesterday, like DWT, 26% in the green, did very well. Let me know down below if you guys ended up trading that. Drip, another one, did extremely well today, up 40%, up $126. And Drip goes up, if you guys don't know, whenever XOP is selling off. Whenever XOP, which is an oil and gas-based ETF, it's seeing that sell-off like it did today, 9% in the red. Drip is going up at a 3x rate, which is why you're seeing that big move in Drip. And let's take a look at gold, guys. /GC, gold ended up seeing a fill at the resistance. Remember that resistance we were talking about? 1540 yesterday. We were trading in this range between 1540 and 1440. Well, we got rejected there, down $40, down 2.5% on gold. Silver, good old silver, down 50 cents, down almost 4% here on the day. And natural gas. Let's end off the video with natural gas here. I'm pretty sure the future is NG rather, J20, which are the April contracts here. Natural gas down 10 cents today, which means D-gas did absolutely incredible, up 12% at the close, up almost $40 per share. So at this point, when it comes to natural gas, I'm looking for a potential rebound. We hit that lower low. We've seen this happen before. It gets overextended to the downside, oversold, right? And then it sees some sort of pushback play to the 50 SMA on the 4-hour chart. And that could very well be what we're seeing happen right now, meaning we could trade UGAS tomorrow, which goes up whenever natural gas is going up, on that potential rebound play. And that's honestly what I'm focusing on here over the next trading day, maybe the next 2 trading days, looking to see if I can get that play. So overall, guys, that is it for today's video. If you guys enjoyed it, feel free to go down below, hit that like button, and also consider subscribing to the channel if you want to see further content like this. And don't forget to join our Discord group chat and our Facebook group, link down below in the description box. And you can also get 2 free stocks from Webull valued up to $1,400 using my affiliate link, and that is also linked down below in the description box. All you have to do is deposit $100 and you get those 2 free stocks, again valued up to $1,400. So I'll catch you all in the next video. Good luck in this crazy market. Take it easy. Don't panic. We're going to make it through, guys. So again, thanks for watching. I'll catch you all. Peace out.